Over this past week, SoFi has been diluting shareholders. They announced another public offering of common stock. Now, they already raised last quarter and they raised again, which begs the question, why are they raising so much money? Could there potentially be an acquisition, potentially an S&P 500 inclusion, which we just validated a couple hours ago that that's not going to be the case because SoFi was not admitted into the S&P 500. And I've been thinking quite a lot about this around the timing and around the strategic piece of raising this money. And I want to share all those thoughts in this video. Without further ado, let's jump right in. So let's start off first and foremost with the news, and then I'll jump into some analysis. So here I said yesterday that SoFi is announcing the $1.5 billion public offering of common stock. Funds are going to be used to strengthen capital, improve efficiency, and fuel growth. And here my question was, why would you raise cash with such a strong balance sheet position? Could we potentially see an acquisition? And I further expanded, saying that the main question here is going to be what these funds are going to be used for, especially considering that this is not the first time, because they raised last earnings as well, and they have good capital ratios. They have lots of flexibility as it stands. Hopefully, we get some color for management that adds a little bit more than general corporate purposes, which is what we saw in this press release, which came out yesterday. So they're raising $1.5 billion through the sale of common stock. They're going to give another 30-day option to purchase an additional 15% to Goldman Sachs, which is the underwriter of this offering. All shares of common stock will be sold by SoFi, and SoFi intends to use the net proceeds of the offering for general corporate purposes, including but not limited to enhancing capital position, increasing optionality, and enabling further efficiency of capital management. That doesn't really tell us much. That's legal jargon, essentially. They also released this later, which is the pricing of the public offering of common stock. So it's going to be priced at $27.50 per share, and they're going to be underwriting about 54.5 million shares of common stock for 1.5 billion in total proceeds. But that's likely going to go up to about 1.7 billion because, again, Goldman Sachs has that 30-day option for an additional 8.1 million shares. So this offering is going to close by December the 8th, which is Monday. And of course, this same sentence is repeated in the last filing. Now, of course, if we look at some critiques around this, I think the main critique is that this is incongruent with what they've said in the past. So Couch Investor here has SoFi's CFO, Chris Lapointe, who literally on Wednesday was asked multiple times around this capital raise. And he said, quote, "The capital raise we offered last earnings was purely opportunistic." This is the one that they did when they were at $23 per share, saying it was purely opportunistic because it gave them a lot of flexibility. And keep in mind, the reason why they say this is opportunistic and helps the business grow is because they can close off debt with these capital raises and improve their financial position. He said, "We're happy with the pace of growth that they've seen. We would expect heading forward that we would grow the balance sheet at a good pace, and we'll provide more guidance as to that growth. But again, great opportunity." And the host pressed Chris Lapointe for this about potential mergers and acquisitions. And he said, with the capital levels at 20%, that provides a significant opportunity to explore both inorganic and organic opportunities for growth. We look at a number of assets every single day. There's nothing really imminent at this point, but we have a ton of optionality, particularly as we're heading into 2026. So basically here, Chris Lapointe is signaling that, hey, we have enough money to maneuver. We don't have a particular target to buy out. And yet 24 hours later, they dropped the press release that they're selling more stock and raising more money. And Nurse Jerbear responded to my post saying 60 days ago, they said they have existing liquidity that will be sufficient to meet capital expenditure needs as well as their planned growth for at least the next 12 months. So this was at earnings 2 months ago. They said, we're fine. We don't need to raise more money. And then 24 hours ago, the CFO affirms the capital levels of 20%. And then yesterday they diluted by $1.5 billion with their latest raise. This is, I think, the main issue that retail investors are having. This doesn't make sense, not only because we don't know where these funds are going to be allocated to. And of course, with that, a lot of bulls will say, well, there's an underlying trust in management that they're going to do what's right with these funds. But them saying one thing and then going around and doing something completely different is what many investors are taking issue with. So here you have the same statement around the liquidity being sufficient. This is in their earnings release. And then here's a quote from Chris Lapointe on Wednesday's fireside chat with regards to the capital ratios at 20%. Anyways, they raised the money. It's about 4 to 5% dilution. And when you factor in the 15% that Goldman is going to take them up on, it's going to be closer to 5% dilution. So the stock was down about 7% in response to that news. And the reason why the timing is interesting here is because in the past, they said, we don't need this money. And all of a sudden, they dropped this news one day before the S&P announcement, which led a lot of people to speculate that SoFi thought they were getting into the S&P and wanted to sell into the liquidity wall of index funds buying the stock. They likely didn't know for sure, so this was maybe a hedge that they did to raise it at this time. If they missed the S&P announcement, which of course they did, they secured the cash anyways at 27.50. Of course, after hours, the stock is down another 1% because they missed the S&P. The S&P 500 committee had a number of different alternatives of who could join, including SoFi. So here you have MicroStrategy, you had Reddit, Carvana, SoFi, you had Cheniere here, and so you had Viva Systems. And I think a lot of people knew that it was a long shot for December admission. In fact, the S&P 500 committee did go ahead and add Carvana, as well as Comfort Systems, ticker symbol FIX, and CRH into the index. So you can see the three additions there of CRH, Carvana, and Comfort Systems. And they removed LKQ, Solstice, and Mohawk Industries. So all of these three companies were switched around. And I think a lot of people were disappointed with this rebalance, particularly not just because SoFi didn't make it in, but because there was such better options to be added. And yet you have the index adding Carvana, which I mean, Carvana went from like $3 to $400 for the second time this year. And I guess the main critique there is with regards to the quality of the companies that they're adding seems to be somewhat lackluster relative to the companies that they could have been adding instead, SoFi included, of course. So that brings us to this capital raise. Now, the hypothesis, really, there's a couple of different alternatives. And one of the paths was the S&P leverage play, which I just talked about, right? If SoFi knew they were getting in, or if they had a good suspicion, they would want to front run to get in and sell into that liquidity wall. I think number two is going to be this convertible debt problem. So SoFi has 2026 convertible notes. They have a capped call that protects them from dilution up to about $32 a share, which means that if the stock runs past $32, the issuance runs out and they get diluted. And so they can use this $1.7 billion to wipe out the debt now, clearing the runway for future growth past $32 without any penalties. And really, debt has been the primary reason that SoFi has issued shares in the past, because once they clear out that debt, then it improves their financial position as a company going forward. But the more interesting path was really acquisitions. I think that's the exciting smoking gun that people want to see. You have these high capital ratios. Their risk-based capital ratio is around 14%. Recently, it was moved to 20%, and this new raise pushes it to around 25%. The logic there is a bank that's holding 25% capital is incredibly inefficient. It drags down the ROE. You can't lend money fast enough to use that much cash. And by raising this money now, Anthony Noto is essentially diluting himself because the performance bonuses only hit at $35 and $45. And it makes it harder to hit those targets by diluting because, as you saw, the stock price reaction, right? He wouldn't do this unless he believes the ROI from a raise would be massive, which leads me into this acquisition route, because if they acquire something that can seriously propel their business, then the stock can fly. But we don't necessarily know if an acquisition is on the horizon, and they can't announce an acquisition until they've secured the funding. So probably on Monday, when the funding closes, can we get a little bit more details around what SoFi is looking to do? Or even if there is an acquisition in the works, we'll only hear about that after this money has already been secured. Now, with regards to what CFO said, I mean, the capital raise being purely opportunistic, there's nothing imminent at this time for M&A. Nothing imminent just means we haven't signed the final contract, right? He wants to allow themselves the flexibility to be aggressive with anything that they choose to purchase. I think that they could potentially purchase something in the crypto space, but I think the most reasonable use of these proceeds would be debt related. I think once the debt is tackled and neutralized, the balance sheet is a complete fortress. The bad news is, of course, you have short-term volatility, you have more dilution, and you have this breach of trust somewhat from management, where they're basically saying things that are incongruent with their previous statements. And that, I think, is the thing that rubs me the wrong way. Not necessarily that they're raising more money, because I trust in management to be able to use that money effectively to have positive ROI on their dilution. So if they're diluting shareholders by 4%, I trust them to do something that will raise the business fundamentally much more than 4%, so that investors can benefit even in spite of that dilution. I think Anthony Noto and the entire SoFi team took a hit on their word and the trust that they have with a lot of retail investors to secure this financing. I think most investors were blindsided by it, myself included, because with a 25% capital ratio, you have to announce some type of big move, an acquisition, a massive loan expansion, something massive in Q1 2026, especially because they have their Q4 earnings coming up in January. So I would imagine that there's going to be an announcement at some point, because you don't load up on this much firepower without a plan to fire it. And you have these incentives with management's PSUs in the summer of 2026 for $35 and $45. And if they're removing more debt, and if they have an acquisition or something to that effect, something that has high ROI on the business, they would be expected to announce it sooner rather than later. My bet would be at some point around the earnings in January, if not sooner than that. But again, with SoFi, the thing that I rely on is the fact that they haven't really led us astray with previous raises. And a lot of that is dictated by previous events. They raised last quarter and it was at $23 a stock and it shot the stock down, but largely that dip was bought right back up and the stock propelled to new highs. And I think the same is going to happen here. The dip is going to get bought up and it's going to propel to new highs. I just think that we need more information on how they're going to use this money effectively to accelerate their growth even further. And ultimately, that's the missing piece here that I would love to know as a shareholder. So maybe we're going to get another press release dropping on Monday after this deal has closed and the money is secured. Maybe we're going to get the announcement that SoFi is buying a company. My bet would be a crypto company if they do. Most likely it's going to be debt related and they're just improving their balance sheet even further. But the level of safety that they're operating under does give me a little bit of pause, because they have such high ambitions for what their future growth should and could and they want it to be. So I would expect them to be a little bit more aggressive in terms of leveraging this capital to their benefit. Time is going to tell, of course. Ultimately, this comes down to whether you trust management to do what's best and give high ROI to investors, or you don't. And in my case, I remain steadfast in the incentive structure being there for management to get the stock price up. And of course, that helps me as an investor as well. But I don't love the dilution. I don't love that they're saying one thing and doing something completely different, especially because they explicitly called out that they don't need to raise more money. So I understand when you do it once and it's opportunistic, but when you do it a second time and you say it's opportunistic, like at what point do people stop trusting management in terms of what their statements are? So that's my main complaint around this, is you can keep the investor base in the dark and the trust will go so far as you can execute. But at the end of the day, like, I don't think any investor is really feeling good about this raise, because nobody knows really what it's going to be used towards. Anyways, now I'm rambling, but that's just my raw thoughts on this capital raise specifically. They have a lot of firepower. We just now need to know where they're going to direct that firepower, because that is the make or break $1 million question that has the potential to drag SoFi right back above $32, or to have it sit down here for a while until all of that is absorbed. Thank you so much for watching. I'll see you in the next one.